Hi, welcome to the Market Alert for Monday, the 20th of October 2014. Starting off with the 5-minute chart, you can see the volatility continued on Friday for the Dow Jones. You can see trading from here, each of these grey lines is 50 points. So you can see the sort of distance the market travelled on Friday. Look at the daily chart, you will see this big up move for Friday's trading session of some 300 points. Again, the early part of the trading session showed the volatility. You can see this in these big range price bars here. At the late afternoon, early evening, we started to see the market settle down a bit, and we had our first signals, which we've not had for a few days because of the enormity of the volatility in the market. It's been very volatile with some price bars of over 150 points. And as I said in the market alert on Thursday, sometimes volatility can work against us as well, which is we don't get the signals because the market's moving in such a wide range. So we had a potential signal, and I know a few of you actually made money out of this one as the market filled the order, didn't stop out the trade, which you can see they came close to stopping the trade out, but then the market continued lower, trading down to the recent support down at this level, which is the 16,300 level, which is a major psychological level, which is around 80 points for the Dow down to this level. However, in between, and myself, I decided to switch and go to the long side, which obviously was the bad decision because the market then took out the buy side and the short dominated. But again, the good thing about trading, I'm never too concerned about a losing trade because one, the minimum risk I was trying to keep down to around 1%. And secondly, a losing trade, in my opinion, is just loaning money to the market, and I expect it back with interest at some point, which is generally the case. So it depends how you view losing trades, and like I say, how much you actually risk on a trade. If you're going to risk 50% of available funds, then you are not going to be in the trading game for long. And secondly, it doesn't help as far as the psychology of trading is concerned as well. It's sort of the slowly approach, but consistent approach that will keep anybody in trading the markets. So on the overnight, the 5-minute chart, so I'm just going to drag this over to the left. You can see the market's fairly quiet. We've got quite a narrow range of trading going on at the moment. It's around 25 points, so fairly quiet, and also again showing that the sort of the volatility and froth we had in the market last week is subsiding there. If we have a look at the daily chart, you can see that the big range on Friday, and again we're moving back to the upside. No surprise here, because after every major correction you will see the market reverse and go to the upside. So let me just show you this. If we go back to July, you can see we had a correction in the market there, and then price is moving back to the upside. And these sort of corrections are what are known as V-shaped corrections, and I also wrote about these in the manual as well, about looking for the pattern that this market creates. And again, we see a big correction, and we don't see any hesitation whatsoever. The market stops and reverses and goes back to the upside. Again, stops, goes back to the upside, comes down, goes back to the upside. So you can see this pattern. I can keep going back all the way for the last 5 years showing you this, and it's exactly the same pattern. So where we are at the moment is we've just completed the shakeout to the downside, and now we're heading back to the upside. So the next upside target in this market for me will be the high of this selling bar that we had last week. This one was the 13th of October. So that for me is the next upside target should prices continue to move higher. And of course, based on the fact that all of the previous corrections, we've seen the market reverse and move back to the upside. So it's the buy side I will be looking for. But of course, it is slightly different at the moment than it has been in the past because of the geopolitical issues around the globe at the moment. So we could see the odd day or two where the market pulls back as well. So again, just keep that in mind. Just allow the software to give you the signals and then trade the signals as they come up. But again, just be warned, if you get in sort of a sell signal at a major support area, just watch the market doesn't find support there. There are plenty of other videos in the market alerts about this as well, so do go back and have a look at them as well. Right, on the economic news front for today, we don't have any news apart from Powell is speaking at 3 p.m. He's a member of the Federal Open Market Committee. He's going to be speaking at 3 p.m., half an hour into the Dow's trading session. It's a medium impact news item. It's not like having Yellen speak. So I've no doubt whatever he said is going to have a positive note as far as prices are concerned. So watch this at 3 p.m. Just in case he does say something that will boost the market as well, just in case you happen to be in a short trade at the time. Right, well, that's it from me. I will see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching. See you in the next one.